Tata Power talking about going ahead and probably looking at the UP Discom as well after the success that they've found in Orissa. Stocks down about 0.5% at this point in time. Well, we're staying with the industrial space. The next company on our radar is Hitachi Energy. The fourth quarter performance was another pretty strong performance, especially on the operational parameters. The margins were a beat on expectations, and the order book has seen a growth of 166%, and profit has also increased. We have Venu, Managing Director and CEO at Hitachi Energy, now joining in. Mr. Venu, thank you so much, and congratulations on another good quarter. Now, some will quibble and say that your top-line growth in Q4 is not as strong as what you've done historically. The top-line growth, I think, is about 11%. But obviously, those margins at 12.6%, they're looking spectacular. I'll start with the one main question. This HVDC order that you've bagged, this was a big announcement over the year that's closed out. Now, what is the revenue recognition timeline? I mean, over how many quarters? When does it start coming in? Yeah. And therefore, when will it start leading to, stronger revenue growth?
Sure. No, I think thank you very much having you in your show, and good morning to all of you. And as you have seen, our results, strategic focus, and also cyclical trends delivered a very strong quarter in a Q4. And if you really let me give a 30 seconds deep dive of our results. And our orders are up in the quarter almost 56%. Our revenue are up by almost 13% on year-on-year basis. And our margin in the quarter is up by 62%. And our operational EBITDA came double-digit, 12.3%. And this is also our full year performance. And if you really take the whole of year, our orders are up pretty strong, 228%, primarily bagging HVDC order and others as well. And revenue is up 23%.
Yes.
Whole year revenue up is a very strong orders. And we have been consistently saying in your own channel that we have been growing higher than the market on the top orders especially. And then once we have the order backlog, so naturally it will convert into a revenue over a period of time. And that exactly happened in that. But if I come back to your specific question on the HVDC order, which we have backed.
Recognition. Yeah. So we just want to understand, just for the benefit of our viewers, the revenue that you did in FY25 was 6,385 crores.
Right.
And your EBITDA margins were already at a multi-year high, 9.3%. So we just want to understand that as the booking of this HVDC order starts, how will the FY26 P&L profile look like? Revenue, margins, how does it change?
Yeah, as you know that we don't give you a forward-looking statement, but let me give you a little bit of marker so that you understand that. We have been consistently saying that we will reach a double-digit margin by end of this financial year. In the quarter, we already reached here. And we said we will sustain that. Quarter by quarter can differ. But on an overall year, if you really look at the FY26, we said we will do a double-digit margins on that. Our HVDC's revenues this year is going to be a very small revenues. But in the year 27 and 28, we're going to have a bulk of the revenues we're going to realize in these two projects in that.
So, okay, so even without the, it'll be a very small trickle of the HVDC boost that comes in this year. Yeah. Even without that, you're saying margins will be in what, low teens? When you say double digit, what does that mean? Low teens, mid teens, some range?
We don't want to give a thing. I said we'll enter double digit and we'll sustain there. But again, I'm saying quarter on quarter might change. But on a year wise, if you really look at an overall year basis, so we will I think sustain the double digit.
Okay. All right, Mr. Venu, good morning and good to see you, Ben. You can focus on business, but the markets seem to sometimes take into, factor in valuations. Could you explain why the stock is down 4% or thereabouts, but the performance has been good? Now, on your order book, you have disclosed it at around 19,250 crores, right. But you have not factored in the second HVDC order from the Adani Group, because I think that was signed in April 2025.
Absolutely right.
This will be accounted for in the first quarter of 2026. So if that is the case, back of the envelope calculation suggests it could be around 11,000 crores, which means your order book could be around 30,000 crores. Am I around about the correct numbers?
Yeah, if you, the other order is in the ballpark of 8 to 10,000 crores. So if you add that, so naturally it will be there.
Okay, all right. So around 30,000 crores, 30,000 crores is what we can assume, going by what you have disclosed and what you will disclose at the end of quarter one. That's out of the way. Now, services is a smaller part of your business, but you've separated that as well. You've put it on, in your numbers.
Yeah.
How big can services become as a percentage of your business? And also exports, that's the other one that drives business, right?
Right.
How much will services scale up? How much can exports contribute to the pie? Because they are both margin accretive. Go ahead, sir.
So on the there's two other levers for our growth, as well as both top line and bottom line, as the services and exports we have been consistently saying and consistently driving. Services right now is a single digit, and we have a plans to take it to the mid-teens, maybe double digit. And we also talked about previously that the potential is based on our install base. We have a close to 2,000 crores order book possibilities there. It won't happen overnight, but we are looking at anywhere between 3 to 4 years time. Today we are around 500, 600 crores level of the service in that. So there is a potential. On the exports, if you take a last year exports without HVDC, our exports are in the 30-35% of our total orders. And we have been consistently saying that we would like to in the range bound of 25-30%. We're already there in that, but we will add more and more exports. But our key focus is going to be a domestic market. We see a lot of pipeline, very huge pipeline, and not only on the renewable but also on the transmission, but energy storage, data centers. All those things are a huge tailwinds for us. I think we are focusing, and you all know that we announced a 2,000 crores capex. And as we speak, and many of these projects are underway, so this will also add to increase our installed capacity in India.
In fact, I wanted to talk to you about your Capex, 2,000 crore over the next 4 to 5 years. I think the cash in the books now is 3,800 crore. Is that correct?
Right.
So what lines are you adding capacity in? What will be the incremental revenue, the margin potential from your Capex, and when will it come on stream?
Yeah. So again, it won't happen overnight. So we are talking about a 4 to 5 year thing, and there are many projects we are taking. For example, some of our large power transformer capacities we are adding, some of the very critical components required for the transformer insulation material, so that we are expanding it. Some bushings we are expanding it. Some of the new technologies, first time we are bringing it to India. For example, HVDC bushings is a very, very clear component, very important component. We are bringing those things. So these are all coming in a phased manner. And generally, our asset turnover is in the range of 3 to 4 times to start with, because they're quite a big capex, and then afterwards it might go higher in that. So it is coming in a phased manner, and we are on track as far as our planned capex is concerned. And we see that in the next 4 to 5 years we complete what we have committed, what we have promised.
Just a quick word on the data center opportunity. Will you be able to quantify?
No, data center is quite a big opportunity. Every data center.
But for you, will you be able to put a number to that? We know the total addressable market is huge.
I'll tell you, our addressable market in every data center capex 15 to 20%, depending upon the hyperscale. Every hyperscale coming into the picture, 15% of the data center capex is our addressable market.
And how much will you be able to realize?
As we speak now, every 1 out of the 3 data center is powered by us, especially on the grid connection and on that. So we are looking at to maintain that our market share.
Mr. Venu, I'm just going back to HVDC for a second, sir. This 30,000 crores of rough order book, if we count in the April, so as of today, if we talk about it, roughly 30,000 crores.
Yeah.
What is the split between HVDC and non-HVDC as of now? Just percentage, rough percentage.
As I said, as we speak, as of end of this last financial year, our order backlog is 19,245 crores, and the new order we have booked only in the month of April, so which we're going to tell you after the end of the quarter closure. But on the 19,245 crores, is the only one HVDC is sitting in this thing. The rest of the things is non-HVDC, like your data center, industrial things, services, exports, etc.
No, what I'm trying to now get at is that two-part question. FY26, what is the, and you'll eventually book this one, and I don't know if the third HVDC order, whether that comes up for bidding this year itself or not. Yeah. Just tell us that. And, by the end of this year, what will your mix be between HVDC and non-HVDC?
No, we don't do that way, mix, because HVDC is also one of our levers. It's not the only one, because take, for example, HVDC, all our 4 business units portfolio go into this particular project. So that way, we don't make separate HVDCs are separate, and that way we don't treat that.
You don't bifurcate that. Okay, and I get your point that FY26, you said it'll be a very small, quantum of revenue that will be booked. If you could give us some sense, and then just give us some sense of FY27, because the market discounts the future, right? We're just trying to understand that from a P&L standpoint, what kind of revenue will be booked in FY27 from this large HVDC chunk that you have?
Let me give you a little bit of marker for you to understand. The HVDC projects normally we complete in 48 to 54 months. So 48 is the first bipole, and 54 is the second bipole in that. So normally in the first year, we do a lot of engineering and the small revenues. So that will be very small percentage, low single digit in that. The second year will be slightly higher, and the third year is where the bulk of the revenue comes in that.
So FY28 is where the bulk of the revenue comes
27
in.
also, 27 second half also is quite a thing, and 28 will be definitely much higher.
All right.
Understand these two projects has around 6 months delay, so naturally that particular revenue delay also will be.
Okay. All right. Mr. Venu, very quickly before we let you go, small nuclear reactors, well, that's been in focus in India as well. Now, your parent, Hitachi, has globally very strong nuclear capabilities. If and when this opportunity opens up in India, will it be pursued under the listed entity, Hitachi Energy India?
See, Hitachi Energy India, what we do is whatever is required for the, this nuclear thing we do, but not on the technology standpoint, is a separate company.
Okay, so then it would not entirely come under this entity, right?
Yeah, but what is required for that, powering the nuclear thing, like offshore and auxiliaries, etc., will come from us.
Okay, all right. We'll press you a little bit more on this. But thanks a lot for joining in. I recall when I visited your unit, you all were gunning for double-digit margins. Now margins are improving. Exports and services are going to be a larger share of your contribution, which will help profitability. Thanks a lot for joining in, Mr. Venu. Looking forward to chatting up with you as the year progresses. For the time being, slip into a short break. On the other side, we'll be joined by the management of Muthoot Finance. Stay with us.